You're listening to the Infinite Banking Mastery Podcast. Did you know that you could build a tax-free pool of wealth that's liquid and accessible all your life while building your retirement nest egg? Gain full control of your financial future and stop relying on the government and banks. The wealthy have already discovered this wealth-building secret. Now it's your turn to get financially secure without following the conventional wisdom that keeps you in debt to banks. Now here's your host, Valerie LaRocque.
Hello, everybody. Welcome back to the podcast. Thank you for being here as usual. Today, I wanted to talk about something that is very important that a lot of people might not be expressing well enough, that we might not be getting across, even my own podcasts, other excellent podcasts. We may not be getting this across loud and clear enough. So I wanted to make sure that I did a podcast on this topic. And I was reminded of this and thought of even doing a podcast on this topic after listening to a podcast from two of my highly esteemed IBC practitioner colleagues that are based out of Canada. They worked very closely with Nelson Nash for many years, and so they are excellent teachers. And I was listening to a podcast of theirs, and I thought, I should talk about this too. This is very important. And what that is that the infinite banking concept, IBC, is not a product, okay? It's not a product you can go out and just say, hey, I want that IBC product. It is a process. So if you were to call a life insurance company and say, hey, can I get an IBC policy? They will say, what in the world are you talking about? It is not a thing that you can buy, call up and ask for an IBC policy. No. What we are doing is we are teaching people how to use a whole life policy to become their own banker. And the process of becoming your own banker and teaching you how to do that, that really is what we're talking about when we're talking about the infinite banking concept. So the whole life policy that we are going to the insurance company to acquire in order to use to help you become your own banker, to implement the infinite banking concept, is going to be a dividend-paying, participating whole life insurance contract with a mutual company. Now, that is if you are going to an IBC practitioner who has worked with Nelson Nash, learned from him, learned from people who have learned from him, and coached correctly and well. And so not all people out there who are claiming to help with infinite banking are using this style of policy, which we find to be very necessary and important. A universal life policy is not going to cut it in this strategy. It's too dangerous. And so when helping clients to utilize this strategy, we are going to acquire this particular type of whole life contract, which we will use as the entity. We are going to use this entity to implement the process of becoming your own banker. So the contract ends up really what it is a place to store your wealth. It is what Nelson Nash would call a place like a warehouse, to store your warehouse of wealth. That's how he refers to it anyway in his book called The Warehouse of Wealth that you might want to pick up. But what he's saying is you need a place to store your wealth. And what better place is there for it to reside than with a quality life insurance company? That really is the best, most solid place for your wealth to reside. So what we're teaching you is to how to acquire a whole life contract, which is going to be the entity to store and to house your warehouse of wealth. We're going to help you get this contract and then teach you how to become your own banker by utilizing the infinite banking concept, which really is the action of paying yourself back for things that you are borrowing out of your contract with interest. So becoming your own banker is to be in control of how you finance the things that you need in life. And that's why we're referring it as a process. So you are in control. You finance everything you buy. That's something Nelson Nash also would always say. You're either paying interest to someone else because you're borrowing as a loan for a car, you're borrowing through credit cards, you're borrowing in some sort of way to buy something you want. So you're either paying interest to someone else, or you're giving up interest that you could have earned because you bought it in cash. Instead, you went and saved up your cash, you went out and bought something in cash, and so you gave up the interest that those funds would have otherwise been able to earn. So you're financing everything you buy. Why not run your own money through a stable a solid contract with a stable, strong insurance company and run it through there so that your money is able to capture the earning power of those dollars. You're able to capture it with the guaranteed interest rates and the dividends and all that while you are using that same money to finance the things you need in life by borrowing against those funds. Now, Nelson would say, and it's even in his book, Becoming Your Own Banker, that you can bank with anything. You don't need to use a whole life policy. You could bank under your mattress. You could bank with a CD at someone else's bank, which he does give an example of on page 45 of his book. Because it's a process, because the process is treat your own money and respect your own money as much or as the same as you would with any other bank, any other credit card. You borrow that money and you have no problem paying it back with interest. So why not honor yourself and pay yourself with interest when you borrow money against your own contract? So building up some wealth, borrowing against it, and then treating it, amortizing it, coming up with a payment and paying it back over a certain amount of years that you are in control of. So you can select the amount of years or the time frame or the payment. You're in full control. But at least coming up with something where you are paying yourself back with interest so that you can end up with more. You're going to end up with more over time because you would have paid some other bank that interest. You should be paying that same interest to yourself. And when you're doing this action, borrowing against your policy, paying yourself back with interest, you will end up building more and more cash, just like banks do, because they're loaning out all our money and we're paying them back with interest. And that's how they make their money. So, the infinite banking concept is really to teach you this process. And then using the whole life contract with a reputable, strong mutual insurance company that has a dividend paying, participating whole life insurance contract as the warehouse to store your wealth, because life insurance contracts, again, are the best entity to store your capital throughout your life. So just keep in mind that purchasing a whole life product and implementing this process are two different things. You could acquire a policy that a practitioner builds for you that's built in order to implement the infinite banking concept in the best possible way, because we build them in a particular way for them to grow as efficiently as possible. You could acquire this product built this way and then never do any banking with it. You might just let it sit there and keep paying the premiums and letting it grow, and it will still be a good quality contract that you will have in your lifetime to use for whatever you need in your life or in your retirement or to leave a death benefit. It will still be there and do the things that it's able to do, but it would maybe not be considered that you're becoming your own banker if you're not utilizing it throughout your life. So it's possible to have a whole life policy and not be implementing the infinite banking concept, because that concept is the process of you treating yourself like a banker. The wording infinite banking concept is nothing more than treating yourself like a banker. And what we are doing is we are coaching our clients how to use the attributes of a whole life policy throughout their life for their advantage. Now, if you end up actually treating yourself like a banker and listening to our coaching and using your policies in that way to finance the things that you need in your life and pay yourself back with interest and continue the process to the best of your ability, you likely will end up with a system of policies that will be large enough to house your full warehouse of wealth, to be able to store all your wealth. So that's why you may only have one policy. You may or may not be banking with it, or you may end up with more than one. We have 9 right now. So you may end up with more than one policy or not. But by utilizing this system, you are more likely to end up with more than one policy in your lifetime, simply because you will need more space to house your growing wealth. One other thing to keep in mind that I say all the time is that your policy is an asset. It's an asset on the books of the insurance company that you own together. So you and the insurance company are co-owners on your policy. And another thing that people get caught up in a lot is, what's the rate of return? What's the rate of return on my policy? So if you're looking for rate of return, you need to look somewhere else, because this is a place, an entity to house your cash from which you can finance the things you purchase. And it's going to just simply be a more efficient vehicle than a CD at a bank or under your mattress or anything else. It's going to be earning guarantees and dividends. And that's a big reason why it's going to be doing better. Plus, you can borrow against it while it continues to grow, but it's not an investment. So if you want to be seeking rate of return, you need to take the funds from your policy or borrow against your policy, go out and find an investment that you feel will bring you that rate of return that you're looking for. People are often always asking, what's my rate of return? I can get rate of return better somewhere else. Well, you can, and you can do both. Life insurance, owning life insurance, and utilizing this strategy does not make you choose, I'm going to do this or I'm going to do that. It's an and asset. You're able to purchase a life insurance and go out and utilize the funds for whatever other investment that you would like to try to capture that rate of return that you are seeking. So you're looking for rate of return, you need to go somewhere else, not your life insurance policy. Within your life insurance policy, your cash value will eventually increase to meet your death benefit. So, in the beginning of your contract, when you're buying extra life insurance because you're funding extra paid up additions, which is buying paid up insurance, that's why it's called paid up additions, you're increasing your death benefit, which will increase your cash value because at the end of the day, your cash value will need to be the same value as your death benefit by age 121. The company is contractually bound to make sure the cash value equals the death benefit by age 121. And so all of this, everything that I've gone over, rate of return and all that, again, has nothing to do with the infinite banking concept. The infinite banking concept is a process. This is simply an entity that you can own to house your wealth, to house your warehouse of wealth as it's growing throughout your life for all the things that you need. So please, if this is something you want to do for yourself, for your family, please reach out to an infinite banking practitioner rather than the life insurance company directly asking for an infinite banking policy because they simply will not know what you're talking about and they will be confused. I mean, there might be a few people who are starting to understand what we're doing and how we're helping people with the contracts that they build, but there's no such thing out there called, quote, an infinite banking policy. It is a whole life policy that we are using for the infinite banking concept that Nelson Nash coined with his book, Becoming Your Own Banker. Well, again, I hope that this was helpful information, that it was useful to you, that it's something you can learn from. And if you decide that you would like to acquire a dividend paying, participating whole life insurance contract, an entity from which you can implement the process of becoming your own banker, well, please reach out to me. I would love to help you. I would love to become your advisor and coach you through this process. If you want to reach out, my email is valerie@alphaomegawealth.com. I do look forward to hearing from you. I look forward to talking with you, and I hope that we can work together. I hope that you have a great week and enjoy the remainder of your summer. We've got a little less than 1 month left. And wow, I can't believe school is already going to be starting. Summer went so fast. I'll talk to you all next week. Take care.
This is thepodcastfactory.com.